Yes, people, a very, very happy afternoon to all of you. Thank you so much. हो गया ठीक है. So guys, last class, what did we complete? Revaluation with depreciation. Okay. Today my target is 3 adjustments. The first adjustment being the contra adjustment. Second is inward outward. What is it? Inward outward. Upstream, downstream. Oh my God. Upstream and downstream transactions pertaining to inventory. That is elimination of unrealized profits on the inventory that has been sold. And third is dividend. Chalo, let's take question number 9. In this, I have one adjustment to discuss. So this entire question is easy, except that one adjustment that is also easy only. Anyways, Piyush is scolding me from that time. This is why are you doing this in class? But still, for the sake of other people, I'll do it. And especially those people who have not done the homework despite telling. For them, I'll do this question one more time. On 31st March 2020, the summarized balance sheet of H Limited and its subsidiaries S Limited stood as follows. Equity shares has been given, reserve and surplus P&L. See, reserve and surplus and P&L is given separately. This is nonsense. Reserve and surplus should have what? Profit and loss in it, but they give it separately. So don't get scared. It's okay. We'll consider this as general reserve and we'll consider this as surplus, which is P&L. Then they have secured loan, 12% debenture, current liability, trade payable, bank orders, bills payable. Again, one more thing nonsense happened here. Trade payable is what? Sum total of creditors plus bills payable. But they've given trade payable separately and bills payable separately. Can we do anything about it? Nothing. Total is given. Then we have assets, machinery, furniture, investment in S Limited. Cost is 384. 19,200 shares of 20 each. Okay. Inventories, trade receivables, bills receivables. Again, same but separate. Cash at bank is given. Okay. The following information is also provided to you. It says that H Limited purchased 19,200 shares of S Limited on 1st April 2019. And this is the balance sheet of 31st March 2020. So 1 year prior to this, we have purchased the shares of S Limited when the balances of the reserve and surplus and profit and loss account stood 60,000 and 36,000 respectively. So opening general reserve and opening P&L is given. 19,200 shares has been purchased. May I know what is the percentage of holding? 80. Very good. Donkey fella, just because you've done it, you can't say. You tell me the proper calculations. 2,40,000 is the share capital divided by 10. So 24,000 is the total number of shares. 19,200 shares we are holding out of 24,000 shares. So in percentage, what is our holding? 80 percentage. Got it, not got it? Online people, got it, not got it?
Got it, sir.
Very good. Now, machinery, whose book value is 240, furniture, whose book value is 48,000 of S Limited, were revalued at 360 and 36,000 respectively on 1st April 2019. So this book value is 31st March 2020 ka book value, or is it 1 April 2019 ka book value? Very good, because 31st March 2020 ka book value is given in the balance sheet. So this is book value of 1/4/2019. Book value is so much and the corresponding market value is so much. The difference is what? Revaluation, upward or downward. Upward revaluation is profit, downward revaluation is loss. And we have to do revaluation on the date of acquisition. Rate of depreciation is machinery 10%, furniture 15%. Lovely. On 31st March 2020, bills payable 12,000 shown in S Limited balance sheet has been accepted in favor of H Limited. Now, this is the new transaction I was talking about. Though this is not a new transaction, those who have done amalgamation with me, you know, we call this as contra adjustment. Contra adjustment. So I'll just discuss this. I'll just have a discussion on this topic very slowly now. Rest of the topic will go very fast. It says that on 31st March 2020, bills payable of 12,000 is shown in S Limited ka balance sheet. In S Limited ka balance sheet, 12,000 bills payable is shown. So my question to all of you, who has sold goods to whom? Who has sold goods to whom? Okay. H Limited has sold goods to S Limited. Can you please tell me the entry for the goods that is sold on credit basis? I want to check your basics, how strong you are. On the date of sale, what is the journal entry for? In books of H limited separately and S limited separately. H limited. पहले H limited. Data to sales, credit sale, data to sale. So for me, who's data? S limited is data. 1 second, ma. S limited account debit to sales. H limited sold goods to S limited. So data account debit to sale. This S limited is a unsecured data. Unsecured data. To secure it, what do we do? Very good. H limited along with the goods sold, along with the goods sent. Goods you'd have sent plus invoice you'd have sent plus you'd have sent bills of exchange. Bills of exchange. Where in that document, all the particulars about who sold goods to whom, at what point of time the money should be paid, in what mode the money should be paid, all the terms of payment would have been mentioned in the bills of exchange, which S limited upon receiving it has to sign it. That is called as acceptance. That is called as acceptance. So once the debtor accepts the bill of exchange, he has to give it back to the seller, which is H limited. So once the bill of exchange is being signed or accepted by S limited, and once the H limited is receiving it back, you will pass one entry, and that entry is called as on date of accepting bill of exchange. Very good. Now this data is no longer unsecured, it has become secured. So unsecured data you have to cancel by giving credit. So to S limited. And a secured data is coming by name of bills receivable. Bills receivable account debit to S limited. This is what you studied in CA Foundation. Yes or no? Okay. Can you please tell me what would be the transaction in the books of S limited? On the date of purchase, yes, it is purchase account debit to H limited. The moment the bill of exchange is accepted by S limited and received by H limited, he will reverse this H limited, which is unsecured creditor, and make a secured creditor called as bills payable, bills payable, bills payable. So now H limited account is opened here and closed here. So what is the ultimate entry? Purchase to bills payable. Same way here, S limited is closed. What is my ultimate entry? Bills receivable to sale. So if I open the balance sheet of H limited, you will find bills receivable. What is the amount? I'll take amount here as 12,000. This bills receivable will be appearing on the asset side of balance sheet. Why? Because I have to receive money. What is asset? Anything that I own or anything that I expect to receive in future is asset. So I'm expecting to receive this in future. Hence it is asset. In the balance sheet of S limited, the same amount will be called as bills payable, which means S limited has to pay this money to somebody in future. This is the position of the bills receivable and the bills payable in the standalone balance sheet. Now, when the balance sheet are getting merged, what is going to happen? I'll prepare a consolidated balance sheet. So bills receivable will continue to appear 12,000 on asset side, and bills payable will continue to appear on the liability side. In the standalone balance sheet, H limited is separate entity, S limited is separate entity. So one entity has to pay money to another entity. So showing it separately makes sense. So in the standalone balance sheet, this is a separate pocket. From this pocket, the money has to go to that pocket. So both are two different pockets. This is the pocket of S limited. This is the pocket of H limited. Two different pockets. But when you do the consolidation, both the pocket becomes the pocket of one single entity. जो तेरा है, वो मेरा है. Pratik sir, Anita ma'am, before marriage, your pocket separate, my pocket separate. After marriage, what will I say? जो तेरा है, वो मेरा है. जो मेरा है, वो तेरा है. That's what I say. What do Anita ma'am say? Anita ma'am says, जो तेरा है, वो मेरा है, और जो मेरा है, वो मेरा ही है. Everything is mine. Oh my God, what a disaster. Now, my simple question to all of you. 12,000 rupees we have to receive. 12,000 rupees we have to receive from whom after consolidation? From me only I have to receive. Subsidiary, I have to receive this money from subsidiary. But subsidiary is already sitting with me only. Subsidiaries become my pocket. So I have to receive from me only. And to whom should I pay? I have to pay to my own self only. So does it make any sense? Now both of these pockets have become my pocket. So if I rotate the money, I'll rotate the money from one of my pocket to another of my pocket. So does this asset and liability make any sense? In the true sense, is it an asset and liability? No. Hence, we have to cancel this. We have to cancel this. Any problem? No problem. Bills receivable is sitting on asset side. Always assets have what balance? Debit balance. To increase their balance or to create them, we give a debit. To decrease their balance or close them, I should give a credit. So two bills receivable, how much? 12,000. The moment I put two bills receivable entry here, this will knock off or get removed from my balance sheet. Bills payable is sitting on liability side, having what balance? Credit balance. To increase liability, credit. To decrease liability, debit. I have to decrease liability. I have to give a debit. Bills payable account, debit. The moment I pass this entry here, this will get knocked off. My humble question to all of you. Do we really pass any journal entry in the consolidation? So we can't do this journal entry. So how will you do plus and minus? In balance sheet directly you'll do plus and minus. Got it, not got it. So whatever is the total bills receivable, from that you'll minus this 12,000 rupees. Similarly, in the bills payable, whatever is the total bills payable, from that you'll minus the 12,000 rupees. This way we will eliminate. Debit and credit is nothing but plus and minus. So here debiting means minusing from the liability and here crediting means minusing from asset. So same way I did minus minus directly. Instead of using debit and credit, we used plus and minus directly. Lakshita, any problem? Correct. Correct. Got it. Now, one second. Very important thing. Online people, comfortable, not comfortable.
Yes, sir.
Everybody, open your mouth and respond.
Yes, sir.
Fantastic. Now, you are required to prepare consolidated balance sheet. Who's required to prepare? You are required to prepare. It never said Pratik sir is required to prepare. Hence, I gave this question as homework. Unfortunately, you have not done it. So who has to do it now? You again, you'll do it. You will only do it. I will not do it. Prepare consolidated balance sheet. Now I'm confused that who should prepare consolidation. I think S Limited has to prepare. Yes, no, always holding company, always parent company has to prepare. Pep, Jan 21 question. 20 marks. Aha. Oh, 20 marks. Such a jujjupi question. Oh my God. This is insane. I think we should say all those people who wrote the Jan 21 exam, you come back and write the exam one more time. You pass just like that. Now, let's do it, people. Let's do it. What is the first working note? Working note number one, AOP. Siddharth, you've seen all the initial 5 videos? All pakka. Very good. Tell me, Kana, what is the format? Particulars, percentage, pre-acquisition profit, post-acquisition profit. Okay. Pre-acquisition profit, ka another name is revenue profit, sir. Revenue profit. Oh my God, you all of you know? It's capital profit. And post ka? Revenue profit. Okay, total. After this, I forgot much. Genuinely, I forgot. Don't total nahi. Fellas, split individually. Reserve and surplus and P&L separately. Pre, I will take from balance sheet, sir. Pre, I'll take from balance sheet, sir. No, from the additional information. Pre-profit is 60 and 30. 36? Oh my God. 60 and 36. Sir, this 180 and 60 is there, no? I'll put in total column and come. I'll put this in total column and come. Tell. I'll put this in total column. She fall trap. Madam, this will come in total column only. So this 180 and 60 will go to total column. This trap was for somebody else, but somebody else fell in the trap. Now, the difference is what? You will get to know in some time. 60 was opening profit. By the time you came to the end of the year, the reserve and surplus is 180. So during the year, what is the reserve and surplus that you've created? 120. Opening profit 36,000, closing profit 60,000. During the year, profit is 24,000. If I total this is called as total reserve and surplus. How much it is? 96,000. 1,44,000. 2,40,000. Okay. Any time adjustment, people? Time adjustment will come when? When the opening date is different, acquisition date is different. Acquisition is happening somewhere in the middle of the year. Then the time adjustment will come. Okay. Any revaluation? Yes, sir. There. Are you sure? Oh my God. So working note number 5. Calculation of revaluation profit or revaluation loss. First, I'll take book value, sir. Market value as on date of acquisition. What is date of acquisition? 01/04/19. Who's that? Who's that? Are we allowed to enter class after 12 o'clock? No? Then why is she entering? Market value as on 1/4/19. This is date of acquisition. Now, one column separately for machinery. One is furniture. Okay. First machinery, no? Sorry. I'm so sorry. I'll write machi and come. This is not Hindi wala machi. This is Tamil wala machi. Machi. Siddharth bro. Machi. Machinery का market value is 3,60,000. Very good. And furniture का 36,000. Okay. Less book value as on 1/4/19. Now, sometimes what happens, people? Market value is given. Market value is given on 1 July. Means date of acquisition is 1 July. But book value is given 1/4. So what are you supposed to do? From 1/4 to 1/7, you're supposed to charge depreciation. But here in this question, lucky fellow that the opening date is the acquisition date. So no depreciation will come here. Sir, no depreciation will come. Array, opening depreciation will not come. Depreciation from date of acquisition to end of the year as working note 6, that will come. So you have to understand that there are two calculations of depreciation. There are two calculations of depreciation. I am talking about if the investment is acquired on 1/7. So now depreciation from 1/4 to 1/7, this will come. This will come if the acquisition on 1/7. If the acquisition is on 1/4 itself. So 1/4 board date is given. There is no depreciation required in this case. The other depreciation is what? From the acquisition date to end of the year. That depreciation will come. Okay, not okay. Now, how much is the book value, people? 2,40,000 and 48,000. So 240 worth of the asset is now 360. So upward valuation by how much? 120. 48,000 asset is now 36,000. So in the past, have you over depreciated or under depreciated? Under depreciated karna. That's why the asset value is more. In the past, you have under depreciated. So the value of the asset is more. Had you depreciated properly, the value of the asset would have been this. So you have under depreciated. So now that depreciation we're recording now. What is it? 12,000. Now, anyways, see, under depreciation is just one way of telling you what is this difference actually. We can put a counter logic that the value of the asset, what we depreciated so far is correct. But today we feel that the value of the asset in the market is not going to fetch you more than 36,000 rupees. So you have to further depreciate. So you can take it either ways also. This is a negative. Revaluation profit / revaluation loss in negative. So can we net off and put the total? Put the total column, how much it is? 1,08,000 positive. I will minus this in pre. I'll minus this in pre. I'll minus this in pre. Add in pre. Very good. So add revaluation profit. This profit belongs to old shareholders. Should be recorded in the pre column. 1,08,000. Can I leave it here just like that? No, sir. We have to do the incremental depreciation from the date of acquisition till the end of the year. So working note number 6. This depreciation will come. Calculation of depreciation. Depreciation on revalued asset. 3,60,000 is revalued asset multiplied by 10%. This is for machinery. Next for furniture is how much? 36,000 into 10 percentage. 15 percentage. Oh my God. So this is 36,000 and this is 5,400. Guys, out of this 360, already we have charged depreciation for 2,40,000. That you minus. So depreciation already charged 240 into 10 percentage and then 48, 48,000 into 15 percentage. 36,000 minus 24,000 is 12,000 further depreciation. And here it is savings. Further depreciation, comma, slash savings in depreciation. How much is savings? 1,800 is saving. Okay, I'm coming. Now, okay. Total depreciation is how much? 10,200. I hope you have no doubts in what is the meaning of savings and depreciation. Correct? No? Are you all clear with the meaning of savings and depreciation? No. Great. This I will minus from post. This I will minus from post. Yes. So less depreciation 10,200 because the usage of the asset from 1/4 to end of the year has happened during the post period. So we have to minus this from the post profits only. Any other adjustment, people? Now tell me the balance. 2,04,000. 1,33,800. That's all. Now, Hex Limited ka total is how much? 80% and others ka 20%. One second. Which one? Percentage you said. Percentage I calculated here. 2,40,000 is total share capital. If I divide by 10, I'll get 24,000 shares. So I'm holding 1,900 shares out of 24,000. So percentage is 80%. Tell me the amount, please. 1,63,200. 40,800. Very good. Online people, are you all getting this? Please do it. Fast. Have you all got it? No response. Online people. Hello.
Yes, sir.
Calculation of goodwill CR. Particulars. Workings. Amount. Investment. On the date of acquisition. How much it is? 3,84,000. Minus net assets. On the date of acquisition. Share capital is 2,40,000 into 80%. How much it is? 1,92,000. Okay. Pre-acquisition profit coming from working note number 1. 1,63,200. What is total net assets? 355,200 worth of assets you got. How much you paid? 384 you paid. Oh my God, you paid so much extra. How much? 28,200 extra you paid. So this capital reserve 28,800 goodwill. Correct? No? Yes, sir. Now, online people, have you all got till this?
So,
Srinidhi? 1 second, current.
சார் இல்ல சார். இன்னும் இல்ல. இப்போ லேப்டாப்ல ஒரு 10% தான் சார்ஜ் இருக்கு.
Okay, சரி. Working note number 3, calculation of minority interest. When we calculate minority interest here, do we calculate as at the balance sheet date or do we calculate on the date of acquisition? Date of acquisition. But if I ask you both questions, I want to know minority interest on date of acquisition as well as at the end of the year. Can you calculate? Yes, let's do it. Particulars, workings, and rupees. First, tell me minority interest on the date of acquisition. Share capital on the date of acquisition. How much? 2,40,000 into 20%. How much it is? 48,000. Then next. Oh, pre-acquisition profit. That belongs to date of acquisition. Coming from working note number 1. How much it is? 4,800. If I add these both, 88,800. This is minority interest on date of acquisition. With this, if I add post acquisition profit, I will get minority interest on the date of acquisition. Sorry, on the date of balance sheet consolidation. Minority interest on date of consolidation. Working note number 4, calculation of consolidated reserve and surplus. Adani podpa. Reserve and surplus of H Limited. How much? It is 480 plus 240. 480 plus 240. How much it is? 4,80,000 plus 2,40,000. You said? 20,000. 7,20,000. Add post acquisition profit of S Limited. This is coming from working note number 1. 1 lakh? Oh, capitalism is not there. Okay. 8 lakh? Super. Now, I will do CPS, but I'll not do with the proper format. Is it okay?
Yes, sir.
You have to do with proper format. Format in the sense I'm talking about all notes properly. I'll do it roughly here. Is it fine?
Yes.
Okay. Consolidated balance sheet. First one is what? Equity and liabilities, the main heading. Under that, the first one, shareholders funds. Under that, first one is share capital. Share capital will take only of the holding company. Subsidiary company ka share capital happens. What happens to that? It knocks off with investment of holding company. Very good. Share capital of holding company is 13,40,000. Okay. B is what? Reserve and surplus. This comes from working note number 4. Very good. 8,27,040. 8,27,040. You have to prepare proper working note, people. This is working note 1. This is working note, not working note. Sorry. Note number 1, note number 2. Proper notes has to come. Next is what? Very good. Minority interest in bracket working note number 3. 1,15,560. 3 is non-current liability. We have long-term borrowings. Under that, first one is long-term borrowing. Note number 3. Only 1 lakh. That's all. Next is current liability. Fourth one, current liability. In that, the first one is sorry, short-term borrowing. You want? I'll put it. Fourth, note number 4. How much it is? Note is not required. Only one item. Note is not required here, people. Note is not required. Long term also note not required because only one item. Trade payable, note number 3. Now, listen to very carefully. No. Boss, listen. Though they have put trade payable and bills payable separately, you can't put it separately. You have to put it combining under one category, which is trade payable. So I'll prepare notes of trade payable separately. Note number 3. Trade payable of H Limited is how much? 2 lakh. Add trade payable of S Limited, which is how much? 1,22,000. Total be recorded in the outer column. How much it is? 3,22,000. Then bills payable of H Limited in the inner column, 60,000. 60,000. Add bills payable of S Limited. How much it is? 14,800. From this, you can do less contra bills payable adjustment, contra debt entry, whatever you say. There's no hard and fast rule. They've used different language here. They used mutual, something like that. Mutual owings. Anything is fine. Mutual owings or contra debt adjustment. How much it is? 12,000. So what is the balance? 62,800. Total is how much? 3,84,800. This should go to the main balance sheet. 3,84,800. That's all. What is the total of liability people? 28,67,400. Very good. Any problem with the liability side? Online people, any problem with the liability side?
No.
Now let's go to asset side. Under that, first one is non-current asset. Non-current asset. In the first one is property, plant, equipment. Property, plant, equipment ka notes will you manage or should I do it? Will manage? Okay. Karna? Okay, let's do. This is note number 4. You tell me, I'll follow you. Note number 4. How will you do it, people? Particulars, rupees inner column, rupees outer column. In that, the first one is machinery. Opening balance of machinery, opening balance of H Limited. Am I right? How much it is? 1 lakh. 7 lakh. Ingapa. 720. Then what do I add now? Revaluation is done of H Limited or S Limited? S Limited. So first I will add S Limited ka book value. Then I'll do the revaluation. So add machinery of S Limited. How much it is? 2,16,000. Add revaluation, profit or upward revaluation? Upward revaluation. How much is upward revaluation? No, only for machinery. 1,20,000. Very good. So what is the total now? 720 plus 2,16,000 plus 120. 10,56,000. Less depreciation for the entire year. Will you take or which one will you take? In this 216, already depreciation of 240 is been charged. Got it, not got it? Uncharged. How much it is? Very good. Depreciation uncharged 12,000 rupees. 10 lakh 44,000. Is ICI doing like this? No. What is ICI doing? What is ICI doing? Here they don't take 260. ICI is taking full 240. 240 they take. So I'm doing OR question here. Or 720 is what? 720 is closing book value of H Limited. Closing value of H Limited. Here we took closing value of S Limited. But what ICI is doing is ICI is taking the opening of S Limited. How much it is? 2,40,000. Got it? Not got it. So the difference between this is what? Current year ka depreciation already charged. So here we have not considered that, and here we are considering that. So we have to minus the entire year ka depreciation also. Got it? Not got it. Add revaluation how much? 120. What's the total now? 10,80,000 rupees. So this is closing balance of the machinery in the books of H Limited, and this is opening balance we have done, which means current year depreciation have not yet reduced. So now when I reduce it, I will not reduce the depreciation only on the revalued figure. I'll minus the depreciation on the entire machinery value from beginning till end. How much it is? Minus 36,000. 10,44,000. If anybody's got any doubt in this, please ask me. One second, ma'am, coming. Depreciation already charged. The asset in the beginning of the year was 240. Current year depreciation is how much? 24,000 minus if I do it. What is the value of the asset at the end of the year? 2,16,000. 2,16,000. Got it? Not got it. So when I did the calculation here, this is our calculation. This is ICA's calculation. Now our calculation, what I did here is, listen. 720 is what? Closing balance of H Limited. Machinery's closing balance of H Limited. I took here closing balance of S Limited of machinery. Both I took closing balance. But what ICA is doing is, ICA is not taking closing balance, ICA is taking the opening balance. Madam, 720 closing balance of H Limited. Now, okay, this is closing balance of H Limited. Now, this 216 is closing balance of S Limited, and this is opening balance of S Limited. Now, tell me where did I go wrong? कहाँ पे इंगड़ा पोट्टना ओपनिंग है this one you're telling now okay now you decide opening or closing sir ने opening balance लिया कहाँ से now okay by either ways is correct. ICA is following this. If you do this also is correct. Both are correct. Just closing balance and do revaluation. Game over. And depreciation, what you do? You will do only the depreciation on the difference amount. Exactly. See, once again, what I'm telling is, either ways you can do it. We will do one thing. If you're not comfortable with this, we'll go with what ICA is doing itself. So that we'll have one single uniform answer. Now, why I wanted to go with this method is because people get confused that, see, here for H Limited, you're taking closing. And here, by mistake, if they take, see, there are some people who don't understand concept, they by heart. So what they will do, they'll take 216 here and they'll add 120 and do. I mean, add 120 and minus the, depreciation for the entire year. So I'm a little confused that if people follow that, it'll be problem. I'm a little worried, not confused, I'm a little worried. So what I'm telling is, I'll explain both. Whichever makes you comfortable, you follow. I'm telling one more time, properly listen to me. This is one part where people make a lot of mistake. Let me re-summarize. Do not disturb me. Just let me go with the flow. So guys, are you clear with this part that the 720 is the closing balance of the H Limited machinery value? Okay. Here, I'm again taking closing balance of machinery value of S Limited. Both are closing balance. Any problem? Now, with this, what am I supposed to do, people? I have to do the revaluation. If it is upward revaluation, add it. If it is downward revaluation, minus it. So here, in case of machinery, it is upward revaluation. So if I add 120, so my total value of the asset is 10,56,000. Now, When I minus the depreciation, I'll only minus the depreciation on the revalued figure. So what is upward revaluation? 1,20,000. What is the depreciation on that? That alone I'll minus it. Got it, not got it. Got it, not got it. Got it. This is one way of doing it. Here, people should not have confusion because I've taken both closing balance. Whatever depreciation whatever upward revaluation I've done, uska proportionate depreciation is what I've subtracted and got the closing balance. But now what ICA is doing is that ICA is taking closing balance of H Limited, but opening balance of S Limited. Opening balance of S Limited. So what is happening to this whiteboard today? Yaar? Sorry? It's getting stuck. I don't know why. Network is full only. This is Geo, man. Okay, we'll see. No problem. Now listen. Here we have taken closing balance of H Limited, but opening balance of S Limited. 240 opening balance we have taken. Means during the year, whatever is the depreciation, which is 24,000, I have not deducted from this yet. So I have to deduct. So with this, what am I adding? Upward evaluation 1,20,000. 1080 is the total. From this, I have to minus depreciation. So I'll minus depreciation on 240 and 120, which is how much? 36,000 rupees. So in this part, 24,000 is the depreciation on the opening balance and 12,000 is depreciation on the revaluation amount. So both put together 36,000. So this is my closing balance. Okay, not okay. Now out of this, you tell me which one to follow. I will stick on to that till the end. One or two. We'll stick on to what IC is doing. It is better. We'll do it. This is opening balance, book value. That's correct. That's correct. Chalo, let's do one more thing for furniture now. Furniture. I'm doing ICA style now. ICA style. Tell me the balance, people. Balance of H Limited. Balance of H Limited. How much it is? Furniture. 3,60,000. Okay. This is opening or closing balance? Closing balance. And now I'm putting here opening balance of S Limited. How much it is? I will take it from the information, which is 48,000. 48,000. Here it is. Correct. Now 360 is the closing balance. Got it? Whereas 48,000 is opening balance. This is of S Limited and this is of H Limited. Got it? Not got it? I am preparing consolidated balance sheet on this day. So I need closing balance only. But I'm taking for S Limited alone opening balance. Okay, not okay. Less downward revaluation. How much it is? How much is downward revaluation? 1,800. What is the revised figure? Hey, what is the downward? 12,000? Then 12,000. Then 12,000. 12,000. Okay. Now tell me the total. Or else we'll do one thing. We'll do the adjustment for depreciation also. So less depreciation. Now, depreciation for the entire year on 48,000 was how much? Into 15%. How much it was? 7,200. Then how much is the savings on depreciation? Savings on depreciation. 1,800. So what is my net depreciation? 5,400. That I will minus. Minus 5,400. Tell me the balance. 3 lakh? 90,600. Any problem? $7,200 is the depreciation on 48,000. 1,800 is the reversal of depreciation on the revalued figure. So net depreciation for the entire year is 5,400. This is clear. We'll stick on to one thing alone. Let's not hop between two things. If you want to go with ICA model, let's stick on to that. Clear? Sure.
जो बैलेंस है वही इधर इधर आएगा आपने जब बोला क्लोजिंग बैलेंस रिवैल्यूएशन प्रॉफिट कैसे आएगा तो कभी अपन जो भी एडजस्टमेंट रहता है शेड्यूल की भी जो भी किया था ओपनिंग बैलेंस रिवैल्यूएशन प्रॉफिट आया तो डेप्रिसिएशन
Correct. That's what this presentation ICA is doing. No? See, my point of view was not from the presentation point of view. My point was the method what I gave, it is easy for people to understand. So understanding perspective I went, because in exam, how much important is to stick on to format is equally important to get the answer right also. So logically, this easily gets into head of people. This people will take some time to get into it. This is not big deal. This is also easy only. Anyways, now tell me people, what is my total? 10,44,000 is for machinery and 3,90,600 for furniture. Both put together how much? 14,34,600. Very good. Now, B is intangible asset. Give reference to working note number 2. Goodwill, how much it is? 28,800. Investment, will it come? No. This will knock off with the capital. But if there is any other investment of H Limited and S Limited, that will continue to come. Inventory is how much? 6 plus 2, 8. Current asset, inventory is 8 lakhs. Working note number, or note number 5 rather. Then trade receivable. This is note number 6. I'll do it here itself because you know the format. So 3 lakh plus 90,000 is how much? 3.9 lakh. 1 lakh plus 30,000 and minus 12,000. How much is the balance? 1 lakh 80,000. Total how much? 1 lakh 8,000 or 80,000? 1 lakh 80,000 is it? Okay. So 1 lakh plus 30 minus 12,000 is 1 lakh 18,000. 1 lakh 18,000. So 5 lakh 8,000. 5.08 lakh. Now tell me, cash in bank is how much? 56 plus 40. Don't write cash in bank income, write cash in cash equivalent. Note number 7, how much it is? 96,000. Total. 28 lakh? 400. जो liability का है. Oh my God, Piyush is scolding me very badly. For the question what I already did as homework and game you spent and wasted 1 hour of mine. देख उसके लिए भी 1 सेकंड मांग रही वो. 5,08,000. Can I continue? कहाँ बच्चा? Now, the next concept, very, very important concept, but not tricky. It's very easy. You want me to take class or you want me to give a break of 5 minutes? Because if I start now, I'll not stop for next 1 hour. Because it is continuous. I'll do the question and only stop. We'll take a break of 5 minutes. 5 minutes ka break and then we are starting. Thank you. Yes, people, welcome back from the break. So let's continue with the next new concept, which is elimination of unrealized profit on sale of inventory. S Limited sold goods to H Limited. S Limited sold goods to H Limited. Who is S Limited? Subsidiary company. Has sold goods to H Limited. Who is H Limited? Holding company. The cost of the inventory was worth 1 lakh and they have sold it at 125. Now you may tell the holding and subsidiary are related to each other. Why are they selling at profit? Boss, where have we said that if you have a holding subsidiary relationship, everything will happen on cost to cost basis? No. In AS 18, we agreed that the subsidiary company can sell to holding company and vice versa on profit. But we have to disclose what is the... Yes. No. Not relation you have to disclose. Apart from that, what else have to be given as disclosure? Related party. What is the price that is happening? What is the price that is being charged between them? That has to be mentioned. Now, if I may ask you, what is profit on cost percentage? What is the answer? 25,000 divided by cost is 1 lakh into 100. How much it is? 25% is on cost. What is profit on sale percentage? 25,000 upon sale value 1,25,000 into 100. 20%. Now, a lot of people have a big time difficulty in converting profit and cost to profit on sale. So, I've shared with all of you already in the group a video where I've taught you what are the 4 cases. I've taught you the 4 cases, very, very important. This I recorded this time when I was taking for 11th standard. But all the people who had problem in this calculation, whether 12th graders, foundation, inter, for everybody I shared this video. To you also I've shared the video. And those who are watching this as recording on YouTube, I'll be sharing the link in the description. Please watch it before you continue the video further. Now, S Limited has sold goods to H Limited for 1,25,000 rupees. At the end of the year, when the consolidation is happening, all the goods are still unsold. Okay, not okay. Now, this is balance sheet of H Limited. Inventory of H Limited. Any problem? Now, in consolidation, what happens is that whatever is the balance sheet of S Limited, whatever are the contents of the balance sheet of S Limited will get merged with the balance sheet of H Limited. That is consolidated balance sheet. In the balance sheet of S Limited, in the reserve and surplus, can I say this 25,000 profit will be sitting? Please tell me. If this is the balance sheet of S Limited, in the reserve and surplus, profit will be sitting or not? Because this 25,000 profit from the statement of P&L, ultimately it goes where? To the reserve and surplus. It goes and gets added to reserve and surplus. So in this transaction, see, as long as the balance sheet are prepared on the standalone basis, having the profit separately in the books of S Limited makes sense. But the moment it has been merged, so it is as good as I've sold the goods to my own self. So in that case, whatever the profit is earned, showing that profit in this, does it make sense? In the consolidated balance sheet, we are concerned about only showing the profit that we have earned from the external sales, Internal sales ka profit, what you've undertaken, that will not be reflected in your financial statement. So one impact of this will go to your P&L also. So I'll teach you at the end what is and how to prepare consolidated profit and loss account. But now I'm focusing on balance sheet. So in the balance sheet, I'm telling that in the reserve and surplus of S Limited, the profit is included. And this profit is getting merged with the H Limited. So if I show in my balance sheet, in the consolidated balance sheet, reserve and surplus 25,000. What is this profit? From whom have you earned? My own self. I want this profit from my own transaction. Does it make sense? No. We are supposed to eliminate this profit. The profit. I'm talking about the sale done by S Limited to H Limited. There's a next concept where the sale will be done by H Limited to S Limited. So I'll come to that later. Now I'm focusing on the sale done by S Limited to H Limited. So profit has been registered by whom? S Limited. So profit is getting reflected in reserve and surplus of which company? S Limited. Okay, not okay. Now tell me people, this profit 25,000, should I do any adjustment for this or not? What adjustment I should do? I have to reduce the profit. From where? From the reserve and surplus of subsidiary company. But where will I minus and show this? We prepare a document called as analysis of profit of S Limited. So in the analysis of profit of S Limited, we have to eliminate the subsidiary ka profit. So in AOP, you have the total reserve and surplus. From the total and reserve and surplus, what are we supposed to do? Minus the unrealized profit. Because in that reserve and surplus, in the total reserve and surplus, this 25,000 is included. Hence, to eliminate it, we have to minus it. Okay, not okay. If this transaction has taken place during the post period, I'll minus it from the post profit. If this transaction has taken place between H and S Limited in the pre period, I'll minus from pre profit. Got it, not got it? Got it, not got it? If I don't minus, then what happens? The unminus profit, the profit which you're not minusing, it is distributed between H and S. in various working note 2, 3, 4. So I'm showing that I've earned profits by my own self. That doesn't make sense. Hence, the profit that we have earned from our own internal transaction has to be eliminated. Has to be eliminated. Okay, not okay. Online people, okay, not okay.
Okay, sir.
To eliminate the profit, what do you think the journal entry should be? I'm reducing the profits of S limited. I'm doing consolidated balance sheet. What should be the entry? In consolidation, what should be the entry? Though we don't pass the entry, but with entry you understand better. So profit is credit balance, sir. Profit is credit balance. Profit is what balance? Credit balance. If I want to add profit, increase profit, I have to give a credit. I have to reduce profit, debit. Here my intention is to reduce profit. So reserve and surplus account debit. How much? Let's say 25,000. Do we put journal entry? No. So what will you do? You will minus this from AOP. You will minus this from AOP in the working note number 1. If this transaction is taken place during pre-period, I'll minus from pre-profit. If this is taken place during post-period, I'll minus from post-profit. Any difficulty? What should I give a credit to? Inventories. So in the consolidated balance sheet, you take inventory of S and H and you merge it. You add it and this amount you minus it from the inventory because you are following double entry system of accounting. So one transaction impact should be given in 2 places. So in case of the goods sold by S to H, one impact will come in AOP, another should be subtracted in the inventory balance sheet directly. Like how we did the contra adjustment for bills payable, bills receivable. So on the face of balance sheet, in the notes you did the subtraction, no? Like that here I have to subtract from the inventory part. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Yeah, this is done only in consolidation. You're right. Correct? No. This reserve and surplus, whatever is the total reserve and surplus of S Limited, from that I'll minus this 25,000 and balance reserve and surplus is coming off S Limited. That you split between majority, minority, pre and post and goes to respective working note. Inventory, who's having this inventory? Holding company. So S Limited ka inventory, H Limited ka inventory. In H Limited ka inventory, this amount is there. This have to minus. Got it? Not got it? So this inventory means this inventory of S is held by whom? H. So H ka inventory से will minus this 25,000. S ने बेचा माल, तो माल किसके पास है? H के पास है. तो can I say in this 1,25,000, 25,000 the profit is included. So from the H Limited ka inventory, 25,000 I have to minus it. But in consolidated balance sheet, problem will not happen. You know why? Because when I take inventory, no, I will take S Limited ka inventory plus 1,25,000 total inventory will come. From there I minus 25,000. But conceptually, you have to know that this 25,000 I've subtracted from this part. Got it? Not got it? Online people, got it? Not got it?
Good, sir.
So profit is getting reduced from the reserve and surplus of S Limited, and inventory is getting reduced from the inventory of H Limited. Both are coming together because of consolidation. And because of this consolidation issue only, we are eliminating them. Had the consolidation not been happening, then H will continue to show the inventory at 125 because that is the cost of him. So in standalone balance sheet, this will continue. 125 will continue. And in standalone P&L and standalone balance sheet of S Limited, the profit will continue. So in standalone, we are not doing any adjustment. Hence, in books of accounts, we don't pass any entry. This is done only for the purpose of consolidation. This adjustment is only for consolidation and not for the standalone. Okay, not okay. Online people, okay, not okay.
So,
Okay,
Now,
sir.
now there's something called as stream transaction. There's something called as downstream transaction, which people have a difficulty. They try to by heart it, but they have a difficulty in understanding. So for that, I've given a simple mechanism. You tell me, people, out of holding company and subsidiary company, which is the big company? Holding company is big company. So if I draw something like this, do you have any problem? This holding company. Subsidiary company is smaller. This is H Limited and this is S Limited. Got it? Arrow mark, look at which side arrow mark is going. H to S means H sold goods to S Limited. So what stream is this? Downstream. This is downstream transaction. Any difficulty? Any difficulty? Look at the arrow mark. If the arrow mark is coming down from H to S, it is downstream. The arrow mark is going ulta. The arrow mark is going ulta, which means S sold goods to H Limited. This is called as upstream. The stock is going from down to up, from S to H. It's called upstream transaction. Any difficulty? Now, please tell me, the transaction that we saw now, just the example, is it upstream or downstream? It is upstream. So, if you have this diagram in your mind, in your life, never ever you'll get confused that which is upstream and downstream transaction. Without any image in mind, when you try to buy at something, no, that is when the confusion triggers. So whenever you learn, have a vision of it, have an image about it, you will never have any difficulty in remembering. Online people, what do you say? Okay, not okay?
Understood, sir.
Okay. Now, in upstream transaction, I'm telling you that this 25,000 adjustment is done in two places. One, 25,000 I'm reducing from AOP in working note 1. Another 25,000 rupees I'll reduce in the inventory of the balance sheet. Which balance sheet? Consolidated balance sheet. Any difficulty? Now, let's talk about downstream transaction. Downstream means what? H Limited has sold goods to S Limited. Got it, not got it? Same data. Cost is 1 lakh rupees. 1 lakh rupees. Sale is 125. Profit is same 25. Percentage all, everything is same. In the balance sheet of S Limited, all the inventories are still pending. Unsold it is. How much it is? 1,25,000 worth of inventory is still pending. Now we are doing the consolidation. This inventory will now become the inventory of H Limited. Okay, not okay? In the consolidated balance sheet, showing inventory, not a problem. But showing inventory inclusive of profit is not correct. When this inventory is shown in the balance sheet of S Limited on standalone basis, please understand 125 is the cost of inventory for S Limited. Before the consolidation, before consolidation, this 125 is the cost of the S Limited. You continue to show at cost, following the principle of AS2. But now when the consolidation is done, we know that very well I've sold this product at a profit of 25,000. So when this is coming in the consolidated balance sheet, this 125 will prick me because this has got profit into it. Imagine before marriage, I sold Anita ma'am iPhone worth 1 lakh for 1,25,000 rupees. I was very happy because before marriage, Anita ma'am was just a normal customer to me. So I was very happy earning a profit of 25,000 rupees. Who knew that that customer will come back in my life again as wife? But the same iPhone which I sold it for 125 is come back to my balance sheet. In my personal balance sheet, Anita ma'am ka iPhone has come. Will this 125 prick me or not?
Yes.
It will prick me very much. So what I should do? To remove that discomfort, what I should do? Eliminate the profit. So from the inventory, I will minus 25,000 ka profit. It will become 1 lakh rupees. So whether it is upstream or downstream, elimination of profit from the inventories must. One impact is done here. Where will another impact go? Because in upstream, you give the two impact. One in inventory, second in AOP. So here also, one in inventory will go, I agree. But where will another impact go? It goes to your consolidated reserve and surplus. Because in working note number 4, consolidated reserve and surplus, what do you record? H Limited ka reserve and surplus. In this reserve and surplus, profit is there or not there? Because H Limited sold the product. So in the P&L of H Limited, profit is there. That profit is not distributed. So where will it go and sit? It will go and sit in the reserve and surplus of H Limited. So from the reserve and surplus of H Limited, I have to minus the unrealized profit. Okay, not okay. And after that, add reserve and surplus of S Limited, which is post acquisition. Then I'll get the total reserve and surplus to be added in the consolidated balance sheet. Okay, not okay. So we are talking about elimination of unrealized profit, which will have two effects. If it is upstream transaction, upstream means what? S has sold goods to H. So in whose reserve and surplus profit is booked? In S. So S card treatment we do where in working note 1, which is AOP. Got it, not got it. So from AOP you will minus it. But if it is sold by H to S downstream, then whose profit will minus? H limited ka, which is working note number 4. So upstream means profit ka adjustment in AOP working note 1. If it is downstream, then it is in working note number 4, consolidated. In both the cases, inventory will get reduced. In both the cases, inventory will get reduced. Okay, not okay, people. Now, can we do one question based on this? It's a full-fledged question. Question number 14, scanner question 14. The following summarized balance sheet of S Limited and its subsidiary S Limited were prepared as on 31st March 2017. Equity share capital is given. General reserve is given separately. P&L separately. Trade payable separately. Fixed assets, we have machinery, furniture. We have non-current investment shares in S Limited, 16,000 shares of 20 each. 3,20,000. Inventories, trade receivables, cash in bank. Okay. Percentage you want? Okay. 2 lakh divided by 10. 2 lakh by 10, how much it is? 20,000 shares. Of that, we are holding 16,000. So 16,000 shares out of 20,000 shares into 100, how much it is? 80%. It is given. Oh my God. H Limited acquired 80% shares of S Limited on 1 April 16. And this is the balance sheet on 31st March 17. So 1 year prior to it. 1 year prior to it. On the date of acquisition. On the date of acquisition, general reserve and profit and loss account of S Limited stood at 50,000 and 30,000 respectively. So opening GR opening P&L is given. Sorry. On date of acquisition. Opening data is given, on date of acquisition is given. Okay. Now, machinery ka book value 2 lakh should be revalued 3 lakh. So upward revaluation. And furniture ka book value 40,000 should be revalued 30, which is downward revaluation. Rate of depreciation 10%, 15%. Any problem? No problem. Trade payable of H Limited include 35,000 due to S Limited for goods supplied since the acquisition of shares. So when is the goods supplied? After acquisition. So after acquisition, what are the transactions taking place between H and S? As per that, the trade payable of H Limited, H has to pay to S. So who has sold goods to whom? Who has sold goods to whom? S has sold goods to H. But if this alone is given, then no other information, I can't do elimination of profit. Trade payable is different, inventory is different. Trade payable is different, inventory is different. Adjustment of the profit should be from the inventories, not trade payable. Got it, not got it. So this is just contra cancellation. Nothing to do with your unrealized profit. Because in previous question also we had same data. Trade payable, trade receivable 12,000. We didn't do any adjustments for inventory. Got it, not got it. Now read the next line. These goods are charged at 10% above cost. So this is profit percentage above cost means on cost. So profit on cost is given. And we always need here what? Profit on sale. Hence we have to learn the mechanism of converting the profit on cost to profit on sale. These inventories of H Limited include goods costing 55,000 purchased from S Limited. The inventories of H Limited include goods costing 55,000 purchased from S. So if H is purchasing from S, then who has sold goods to whom? S has sold goods to H Limited. S is selling goods to H Limited. So it is upstream. So in whose books of accounts profit is registered? The person who has sold. S has sold it. So profit is booked in whose books of account? S. So I should minus this profit from AOP or consolidated reserve and surplus? From AOP. Pre or post? Pre or post? The question says that goods supplied since the acquisition of shares. So transaction between both of them has taken place after acquisition. So I have to minus from the post profit and not pre-profit. Okay, not okay. So one impact is minusing from AOP. Second impact should be minusing from the inventories of H Limited. Because inventory, who's holding? H is holding. So from this I have to minus. Okay, not okay. Now listen to very carefully. Again, I'm telling you, those who have not done 11th, 12th foundation with me, offline, online, and recording, those who are watching the recording, I'm uploading one video. I'm uploading the YouTube link in the description. Please go through. It's very, very important before you continue the video further. In that video, I've discussed 4 cases about profit on cost and profit on sale. First 2 cases are very normal, simple case. Case 3 and case 4 is very important, where I've discussed how to convert the profit on cost to profit on sale and vice versa. That is very, very important. Now listen to very carefully. These goods are charged at 10% above cost. 10% above cost. In the inventories of S Limited include goods costing 55,000 purchased from S Limited. I want to know what is the profit that S Limited has made. What is the profit that S Limited has made? Now listen. H Limited, S Limited. What is the cost of the product of H Limited? 55,000. And that is nothing but the sale value of S Limited. Got it, not got it? Now they've given these goods are charged 10% above cost. So the profit that S Limited made is 10% on cost. To get the profit, I need to know the cost. Have they given the cost of S Limited? Have they given cost of S Limited? No. So this is either case 3 or case 4 of my video, in which I've told that when you don't have the cost, I have to calculate the profit on sale, In that video, I took almost 1 hour to discuss this entire concept. Small concept, but I took 1 hour to discuss. So please, if you have not got it, please watch it one more time. Now, please tell me the step-by-step procedure to convert profit on cost to profit on sale. No, इतना complicated करने की जरूरत नहीं है. Simple. Profit on cost is given. Profit on cost का formula is what? Profit is sitting on cost. Profit on cost. Profit is sitting on cost. Any problem? Now, 10% means 10 by 100. So profit is 10, cost is 100. Any problem? Profit on cost percentage is 10 by 100. 10% means 10 by 100. Means for every 100 rupee of cost, what is the profit? 10. Any problem? No problem. This is the first step I'll do. Or I'll say this is the pre-step that I'll do. What is step 1, people? Write down the formula. Selling price is equal to cost price plus profit. Any difficulty? This formula, any difficulty? We're studying since long time. This is step 1. Step 2 is basically, I want you to substitute this data in the equation. 10 is profit, 100 is cost. Not sale, boss, cost. So cost price is 100, profit is 10. What do you think is my selling price? Sorry, 110. Any problem? What do I want? I want step 3, which is profit on sale percentage. Profit upon sale into 100. Do I know what is profit? Yes. Do I know what is sale? Yes. Into 100 is how much? 9.09 0909%. Okay, not okay. Now listen to very carefully. I'm just telling in short. Cost price is 100, or let's say cost price is 200. Profit on cost percentage is 10%. What is profit? Just multiply these both. 200 into 10%, 10 by 100. This I've explained in detail in that video. I'm just doing a crux. For me to multiply these both together, both of them should belong to same family. 200 is cost family and 10% also is belonging to cost family. So both should be cost family. Only then I can multiply and get the profit. Now in this question, the problem is, as the previous data, man. Here it is. Here they've given 55,000 which is belonging to sale family and this 10% is belonging to cost family. I can't multiply these both. 55,000 into 10 by 100, I can't do it because this is 10 profit out of cost. And this 55,000 is sale value. These both I can't multiply. Hence, I'm forced to convert this profit on cost to profit on sale. Now, if I have profit on sale, which is 9.09% by 100, 55,000 is sale family. 9.09 by 100 is also sale family. So both are sale family. I can multiply with one another. I'm going very fast here because if I touch the concept, I'll take 1 hour to discuss, which I don't want to waste. So that's why I've attached the video link. Please watch it. You'll get a very good comfort. So Only three-step, people. When you want to convert profit on cost to profit on sale, only three-step. Step one is what? Write down the formula for selling price. Selling price is equal to cost price plus profit. In this, you substitute the given two data. They've given in question profit on cost. What is profit? What is cost? It is given in the question. I'll get the sale value. Once I get the step two, step three is what? Calculate the profit on sale percentage. Profit upon sale into 100, you'll get the value. Any problem? Now, come back here. Once again, people, once again. It's getting loaded. So what is profit on sale percentage? It is 9.0909% on sale. I want profit in rupees. So for that, I have to multiply two data which is belonging to same family. 55,000 sale value belonging to sale family. 9.09% also belonging to sale family. So 55,000 into 9.0909% if I do, I'll get 5,000 as unrealized profit. This is called as unrealized profit. The profit which I have not realized. Why? Because I've sold the profit and that profit ultimately now belongs to me only. So it is unrealized profit. Don't multiply these both because not multipliable. Because this belonging to cost family and this belonging to sale family, this cannot be multiplied. About this in-depth conceptual discussion in that video, please watch it. Now, 5,000 profit I've got it. Can I go forward? Online people, we've got the working which is 5,000 is the profit to be eliminated. Can I go forward with this? Now, once again, had they given here profit on sale 9.09% directly, then directly you can multiply these both and get the value. Conversion is happening because it is given on cost. Yes, ma, what is your doubt?
Is from S. So S ने 55 सोल्ड किया तो वो सेल वैल्यू.
Correct. You're right. So 55,000 का purchase किया तो हाँ, correct. So S is sold goods worth 55,000 to H. So sale value of S Limited is 55,000. Purchase cost of H Limited is 55,000, which is still there in the inventory of H Limited. Now can we do the calculations? Start people. AOP. Start AOP. Working note 1. Do you have any time adjustments? Any time adjustment? No, because acquisition happening at the beginning of the year. So no time adjustment. So how many adjustments in total? 2. One is for revaluation along with depreciation. Second is elimination of unrealized profit.
Sir, वो question का photo ली.
I'll show it.
Sir, एक और एक doubt है.
You take this part separately and the other part separately.
Sir, जो reserve and surplus minus करना होता है ना, वो आपकी total reserve and surplus से minus करना.
Correct. Total. Guys, those who still have a lack of clarity in inventory, do not panic, because in the beginning of this topic, I just gave you an overall view how it is done. Once you do this entire question with me now, you'll get a complete understanding as to how the adjustment is being done. You just have to hold on till this question. Taken? Chalo, let's go. Tell me the working note 1, people.
The calculation of the.
Working note 1, calculation of AOP of H Limited. Of H Limited. S Limited, oh my God. Particulars. Percentage. Pre-acquisition profit. Post-acquisition profit. Total. Donkey fellow. Ah. Just pausing this video 1 second now. Okay, let's continue, people. Now tell me. Opening GR is 50 and opening P&L is 30. 50 and 30. What is the problem? Hmm? Remove that also.
Calculation of strip profit will take unrealized profit take transaction.
Okay, tell me what is the profit at the end of the year for S Limited? 155 and 65. So what is the during the year profit? 1 lakh 5,000 and 35,000. Okay. Any time adjustment? No.
80,000, 1,20,000.
It's total or all reserve and surplus? 80,000, 1 lakh 40,000 and 2 lakh 20,000. Now we have to do the adjustments for revaluation first, or which one will do? Revaluation will do? Okay. We'll do it later after this. Working note number 5. We'll go in the same order. Working note 5. Calculation of revaluation profit or loss. Market value of market value as on 1/4/16, which is date of acquisition. Separately for machinery, separately for furniture, and then total. What is the market value? 3 lakh. And for furniture, 30,000. Compare this with the book value on date of acquisition. 2 lakh and 40,000. So 1 lakh is upward revaluation and 10,000 is downward revaluation. Net is 90,000 upward revaluation. Add revaluation 90,000 the pre-profit. Working note number 6. Calculation of depreciation. Depreciation on revalued figure, which is how much? 3 lakh into 10% and then 30,000 into 10%. How much it is? 15%. Oh my God. So it is 30,000 and 4,500. This is 30,000. Minus depreciation already charged. 2 lakh is opening balance into 10%, which is 20,000. And 40,000 into 15%. 6,000. So 30 minus 10, 20 is 10,000 additional depreciation and 1,500 savings in depreciation. Net is how much? 8,500 is the net depreciation. Less depreciation 8,500. Now Working note number 7. Calculation of unrealized profit. This is upstream transaction. Upstream transaction. How do you calculate? Selling price of S Limited. How much it is? 55,000.
Yes, problem. Or
Not minus. How to calculate the profit? Once again.
वर्किंग की निकालने से चाहिए प्रॉफिट एंड कॉस्ट दे दिया है डायरेक्टली अगर इनको पता है प्रॉफिट एंड सेल कॉस्ट
No need to do it. See, profit on cost to profit on sale conversion. If time permits, show it. If doesn't permit, do it and come. No problem. Directly. In calcs also, it's fine. But you can't take the risk, okay? Now, profit of S Limited is equal to 55,000 into 9.09%, which is 5,000. Now, the question is, how did this 9.09 come? So, working note number 8. Conversion of profit on cost to profit on sale percentage. Profit on cost percentage is 10%, which is 10 by 100. In that, this is profit and this is cost. Step 1, selling price is equal to cost price plus profit. Step 2, substitute this in step 2. How much is the cost price? 100. Profit is how much? 10. So what is the selling price? 110. I want here profit on sale percentage. So profit upon sale into 100. So 10 by 110 into 100. How much it is? 9.09%. You can do it. See, I'm telling you to calculate this 9.09%, there are multiple ways. What method you have learned, which you're comfortable, you can stick on to that. There's no hard and fast rule. This is the method that I've been teaching for a long time, since 11th. So I'm sticking on the same route. I'm not changing anything. You can do the calculation here itself, the way you said, that is also acceptable.
Fractional.
Yeah, those who are comfortable with fraction, you can stick on to fraction. No problem. Whatever you're used to, comfortable with, continue to do that. Do that itself. No problem. Now, the profit to be eliminated is 5,000. Less unrealized profit in upstream transaction. In exam, not required to write it, but now you write it. Upstream transaction. Upstream means what? Sold by S to H. So who made the profit? S. Now, can I say in this profit of S Limited that 5,000 is included? I will let it be included had this been standalone balance sheet, because in standalone balance sheet, H is separate entity, S is separate entity. So S has sold product to H as a separate entity. I'll record the profit. I have no problem. But when I do consolidation now, both S Limited and H Limited has become one entity. So when I sell the product to my own self in the consolidation, it doesn't make sense. So we say that we have to eliminate the profit from this 140. This 140 has got 5,000 profit, which I made from my own self. So I have to minus my profit of 5,000 rupees. Got it, not got it?
It's
Online people, got it, not got it?
Yes, sir.
Now tell me the revised profit. Wait, ma, this Microsoft is testing my patience now. उसको क्या मालूम है? मेरे को कुछ.
इसने कर दिया ठीक है
If S Limited has sold the product, S Limited has booked the profit. So from his profit, I'll minus no.
अब बाकी
AOP is basically of S Limited. S का profit. So from subsidiary का profit, I'm minusing it. 80,000 plus 90 is how much? 170. How much is post? Okay. Heads limited का percentages 80%. Others का 20%. Tell me the amount. 1% say I have 2 years. It doesn't mean that one data will go to 1 year, another data 1 more year. Only 1 year I have. Tell me properly. 1,36,000. 34,000. Then 1,01,200. 25,300. Online people, are you all getting this? Please confirm.
Yes, sir.
Okay. Working note number 2. Calculation of goodwill CR, which is also called as cost of control, COC. Investment is how much, people? 3,20,000 rupees. Minus net asset on the date of acquisition. See, sometimes the question will be framed in such a way that they'll not give you a balance sheet. No share capital, no reserve and surplus. They'll give you what? They'll give information about asset and external liability. So total asset minus total external liability is what? Net asset. So this net asset can be derived either using liability side approach or even asset side approach. Both are allowed. Both are allowed. Share capital is how much? 2 lakh into 80%, which is 1,60,000. And then pre-acquisition profit is how much? 1,36,000. So total, what is the benefit? 2,96,000. 2,96,000 is the benefit you got, but you paid 320. How much extra you paid? 40,000. 24,000 extra you paid. That is goodwill. Online people, got it, not got it? Working note number 3. Calculation of minority interest. So share capital is 2 lakh into 20%, which is how much? 40,000. Pre-acquisition minority profit 34,000. Post-acquisition minority profit 25,300. Total 99,300. Working note number 4. Calculation of consolidated reserve and surplus. Reserve and surplus of H Limited. It is 435 plus 280. So 4,35,000 plus 2,80,000. How much it is? 7,15,000. Lakshita, from this 7,15,000, what should I minus now?
So nothing minus.
5,000 minus करना पड़ेगा ना?
Agar if it is a downstream.
Very good. So it is downstream transaction means H has sold to S. So who has booked the profit? H Limited. So in this, that profit is included, unrealized profit. Then we have to minus. So in downstream mode, it will come. So minus unrealized profit on downstream transaction, which is 0 in our example. Add post acquisition profit of S Limited. How much it is? 1,01,200. Total how much? 8,16,200. 1 second हो गया बेटा. This is nice. People say 1 second, but they take 1 minute.
Yes, yes, sorry.
Okay. Now, balance sheet who will prepare? Homework?
Yes, sir.
Online people. Balance sheet who will prepare?
Start.
Working note 4 you want to see. Okay.
Yes, in the front. I have a mistake. Sir.
Three में minus होगा.
Sir, एक बार मैंने हम.
If the transaction is done between holding and subsidiary during the pre-period, then that profit I'll minus from the pre-profit. Yes, boss.
एक बार finance वो वाला working note कर रहे हैं PP एक बार.
Oh my God. Okay, do it. I'll wait. No problem. I'm doing balance sheet. Do now itself. Finish it off. Fast. Who will go home, take this note, again recollect the question, recollect all the working notes. Do it now itself. Finish. I will wait. बैलेंस शीट प्रॉपर विद नोट्स.
प्रॉपर्टी जिसके लिए जरूरी है.
लेज इक्वल्स टू இவன் பங்காளி கடை உங்க பங்காளி எங்க
எல்லாம் பார்த்தாங்களே சொல்லு சார்.
பாலாஜி வர நான் வரல இன்னைக்கு ஊர்ல இருக்கானா
சொல்லு சார். இல்லை.
दिस वन
सर जो डिप्रिसिएशन लेना है वो एस्टिमेटेड पे लेना है मतलब
यू टॉकिंग अबाउट पीपी का प्रेजेंटेशन हेड्स लिमिटेड का क्लोजिंग बैलेंस इसका ओपनिंग बैलेंस और डिप्रेशन पूरे साल का आएगा सिर्फ एस लिमिटेड का
சார் எக்ஸாம்ல 2 மணி போடும்.
but we'll stick on to what ICA is doing. Why to chumma change the answer?
सर मैं
See, our answer should match with the key answers of the person who's cutting the paper. So let's not take the risk. Presentation always will stick on to what ICA is doing. हाँ भाई वहीं से आएगा. If anybody wants me to do any working note, let me know.
सर इसका आंसर मशीनरी का 9,10,000.
Others, 9, 10 are you getting it?
इधर देखिए
कौन से नहीं तू बहुत फास्ट है बेटा.
ये लाइब्रेरीज का
हाँ आई थिंक लाइब्रेरीज में हाँ हो गया.
Liabilities at first 3 are copy based only.
नहीं सर
From working note and share capital is coming from the balance sheet.
एंड इसका टोटल पीपी
Do we have contra adjustments here? We have no. हाँ है ना 35,000. So this will minus from the respective trade payables and trade payables of HNS.
सर
We have basically 3 adjustments here. One is for revaluation, second is for contra debt, and third is inventory, unrealized profit. 3 adjustments in total.
नोटिस है 25,500
हैं इसका
Total balance sheet.
यस यस
सर पीपी का 30,500.
और
एक सेकंड
करो करो करो.
एक मिनट
Getting the balance sheet tally is a blissful feeling. I don't want to deprive you of that feeling.
हाँ
एक सेकंड अमाउंट बताना ये क्या है
बहुत बढ़िया. Sakshi, this is called silly mistake. Where are they? It's only for consolidated. பழகிடுச்சு. இது நீ போட்டினா திருப்பி திருப்பி போட்டி பிராக்டிஸ் பண்ணி இது பழகிடும். It's all a matter of practice. The more questions you work out, maza will come.
सर आप पीपी का बोलो इससे तरह बढ़ रहा है.
PP is 13,10,500.
आ गया
So finally, she settled. She was so undressed in the beginning of the class.
सर
Now she is settled. Got it? 25,500 is the right answer. Purvi, what happened? किसके ऊपर जाओ? इसे हाँ. Online people, have you got it?
So,
More than me, it is important that you guys do balance sheet. Yeah, how long you'll take for balance sheet? Yeah. டேய் உன் நோட் கொஞ்சம் எடுத்துட்டீங்க வா நானும் பாக்குறேன் எவ்வளவு ப்ராப்பரா பண்ணிருக்கேன்ட்டு.
मैं बहुत वर्स्ट प्रेजेंटेशन आंसर क्या है 25
Correct. Then what are you doing so far?
asset का करती
So share capital 12 lakhs. Have you all got it? Of only H Limited. Reserve and surplus is coming from working note number 4. Minority interest working note 3. Trade payables, you will add it and minus the contra debt. This is for tangible asset. Intangible goodwill is 24,000. Inventories. Inventories. What did you do with inventories? Add both. Okay, what is holding the inventory? 2,68,000 plus subsidiary inventory 62,000. Whose inventory profit is there? Of H Limited. So from this I have to minus 5,000. So 325 is it coming? Hey Piyush, correct नहीं है बता जल्दी. 268 plus 62 minus 5,000. Correct no? Very good. Add trade receivable of holding company, subsidiary company and minus the contra debt. I'm done. Last question. Over. Game over. Done? Can I wrap up? Online people, any doubts? No homework today. Homework I'll start giving from next class or probably next to next class. Actually, there's one question I wanted to work on downstream, but with that question, we have little bit other adjustments. So I thought I'll finish one more adjustment on dividend, and then we'll do the further questions on inventories. We have more questions on inventories, but today I've restricted here. So guys, next class when we meet, we are going to do a very, very important adjustment on dividend. Dividend and bonus. These are the two most complicated, hated adjustment for many people. So in that, I'm going to do dividend. So next two classes, people, I'm going to focus on dividend. So do not miss the class. Very, very important. So let's wrap up, people. That's all from my side for this session. I'll see you tomorrow morning, 12 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you.
So
Thank you, sir.
Thank you.